Assalamu alaikum. I am Muhammad Usman. Welcome to Global Sustainable Research Solutions. This video is about difference between fiscal policy and monetary policy. What is fiscal policy? It is the means by which a government adjusts its spending levels and tax rates to monitor and influence a nation's economy. In fiscal policy, a government uses its spending and tax rate to control a nation's economy. What is monetary policy? In monetary policy, the authority of a country, like its central bank or currency board, control the supply of money, often targeting an inflation rate or interest rate to ensure price stability and general trust in the currency. In fiscal policy, the government uses its spending and taxes to control the nation's economy. However, in monetary policy, a government uses its interest rate and money supply to maintain stability in the economy. How fiscal and monetary policy are controlled? Fiscal policy is implemented by Parliament of a country or Ministry of Finance of a country. On the other hand, the monetary policy is run by central bank. Tools of fiscal policy and monetary policy. The tools of fiscal policy are government spending and government taxes, while the tools of monetary policy are open market operations, the reserve ratio, the discount rate, and auction facility. There are two types of fiscal policy, and similarly there are two types of monetary policy. The types of fiscal policy are expansionary fiscal policy and second is contractionary fiscal policy. The types of monetary policy are expansionary monetary policy, which is also called easy monetary policy, and second is restrictive monetary policy or tight money policy. What is expansionary fiscal policy? In expansionary fiscal policy, there is increase in government spending or a reduction in taxes or combined government spending increases and tax reduction. Contractionary fiscal policy. In contractionary fiscal policy, there is a decrease in government spending, increase in government taxes, or combined government spending decreases and tax increases. Expansionary monetary policy, which is also called easy money policy, in easy money policy or expansionary monetary policy, there is a reduction in the interest rate in open market operations by government buy bonds from banks and public, decreasing the reserve requirement and reducing the discount rate, and similarly auctioning of more reserves. While in restrictive monetary policy or tight money policy, there is increase in interest rate in open market operations. Government sell bonds to banks and the public. Government increases the reserve requirements. It increases the discount rate and in an auctioning of less reserve. How and when? Expansionary fiscal policy, contractionary fiscal policy, easy money policy, and tight money policies are used. The expansionary fiscal policy is used when there is recession in an economy. What is recession? During the period of recession, there is a decline of output in an economy. When contractionary fiscal policy is used, the contractionary fiscal policy is used when there is demand pull inflation in an economy. We can use in easy money policy when there is unemployment and recession is prevailing in the economy. When there is inflation in the economy, we may use tight money policy or restrictive monetary policy. There are two macroeconomic policies, fiscal policy and monetary policies, that are used to control different macroeconomic problems like recession, demand pull inflation, unemployment, and inflation in an economy. What is fiscal policy? Fiscal policy is the means by which a government adjusts its spending levels and tax rates to monitor and influence a nation's economy. What is monetary policy? It is a process. It is a process by which the monetary authority of a country, like currency board or central bank, control the supply of money, often targeting an inflation rate or interest rate to ensure price stability and general trust in the currency. The fiscal policy is run by parliament or ministry of state of a country, while monetary policy is controlled by central bank of a country. The tools of fiscal policy are government spending and government taxes. The tools of monetary policy are open market operations, reserve ratio, the discount rate, and auction facility. There are two types of fiscal policy and monetary policy. The types of fiscal policy are expansionary fiscal policy, contractionary fiscal policy, and the types of monetary policy are expansionary monetary policy, which is also called easy money policy, and restrictive monetary policy, which is also called tight money policy. In expansionary fiscal policy, the government spending increases, it reduces its taxes, or it may increase both of its spending and reduces its taxes. In contractionary fiscal policy, there is a decline in government spending, expansion of government taxes, or it may be a combined decrease in government spending as well as reduction in its taxes, as well as increase in its taxes. What is contractionary fiscal policy? A contractionary fiscal policy, there is a decline in government spending, increase in government taxes, or combined government spending decreases and tax increases. Expansionary monetary policy or easy money policy. In easy money policy, there is a reduction in the interest rate. In open market operation, the government buy bonds from banks and the public, reducing the reserve requirement, decreasing the discount rate, and auctioning of more reserve. In tight money policy or restrictive monetary policy, there is a increase in the interest rate. In open market operations, government sell bonds to banks and the public, it increases the reserve requirements, increase the discount rate, and auctioning of less reserve. Expansionary fiscal policy is used when there is a recession in an economy, while contractionary fiscal policy is used when there is demand pull inflation in an economy. Expansionary monetary policy is used when there is unemployment and recession in an economy. We can use tight money policy when there is inflation in an economy. Thank you for watching Global Sustainable Solutions. Please like, share, and subscribe GSRS Global Sustainable Solutions for more videos.